Hello and welcome to Second Investment's weekly market wrap-up. During today's session, we will go ahead and review the major events from last week, including figures related to growth from both the United States and the United Kingdom, alongside the political developments which are threatening to spark a trade standoff between the US and Mexico. Besides these issues, other important market happenings included the latest Japanese inflation and trade data ahead of next week's interest rate decision. Afterwards, we will dive into the approaching events that Second Investment believes you should be watching carefully for hints of what financial assets may experience the sharpest momentum over the coming days. With decisions due from three major central banks, major earnings reports forthcoming, and political uncertainty only on the rise, it should be an exciting week ahead for Second Investment traders. Starting out then with our review of last week. Second Investment traders should be conscious of the rapidly evolving political backdrop. Already, with just the stroke of a pen, Trump has jump-started activity in the energy sector with the approval of the Keystone XL pipeline and Dakota Access pipeline. Although environmentalists are protesting the measures, Trump was eager to pounce on the job creation and potential economic benefits. Besides this controversial decision was the move to begin preparations for building a wall along the Mexican border. The Mexican President Peña Nieto has now confirmed he will not be attending a planned meeting for Tuesday with Trump. This decision follows a war of words between the two leaders, with the Mexican leader reminding Trump that Mexico will not pay for the wall. Right now, measures being debated include a 20% tax on all imports from Mexico to fund the border project, a strategy that has been widely rejected by Mexico. However, considering Mexico may face penalties from its single largest trading partner, the US, investors sold the Mexican peso heavily, sending the dollar-peso pair back towards record highs. Meanwhile, the US economy grew less than anticipated during the fourth quarter. According to preliminary estimates from the US Bureau of Economic Analysis, the US economy grew by 1.9%, missing estimates. After a week of pressure, the dollar managed to tick slightly higher on renewed optimism, sending gold back below $1,200. Furthermore, a $1 trillion stimulus proposal from the Democratic Party was enough to push the Dow Jones Industrial Average above the 20,000 point for the first time. Aside from US growth, the UK reported similar preliminary figures last week, with the GDP growth coming in at 2.2%, beating expectations of 2.1%, even though many Brexit naysayers expected economic activity to slide following the referendum decision. Expansion has remained robust in spite of all the gloomy forecasts. In other news, the UK Supreme Court issued their latest ruling on Brexit, confirming that both the House of Commons and the House of Lords must approve the move to trigger Article 50 of the Lisbon Treaty. Although it did excite the EU proponents, the decision is unlikely to impact the plan for beginning exit negotiations. The pound gained ground on the decision, with gains against the dollar tapering towards the end of the week. Switching gears now, and Japan released its latest trade and inflation figures to much fanfare. Thanks to a weaker yen, exports climbed by the fastest pace in 15 months, helping buoy the surplus while imports contracted at a narrower pace. Inflation was slightly more mixed, with the headline figure slipping to 0.3% in December from 0.5% in November, while core inflation fell at a reduced pace of minus 0.2% versus minus 0.4% a month prior. The real momentum in the yen came from the latest announcement that the Bank of Japan is stepping up bond purchases, sending the dollar-yen pair back above the 115. Moving forward then, and Second Investment is excited to present you with the key events in the coming week you really shouldn't miss out on. So, first and foremost, we would like very much to wish all of those observing the Chinese Lunar New Year a happy holiday from the team here at Second Investment. As a result of the holiday, you can expect trading volumes in certain assets to be lower the first few days of the week. The big upcoming announcements for the coming sessions are monetary policy decisions from the Bank of Japan, the Federal Reserve and the Bank of England. None of the institutions is forecast to shift interest rates or asset purchases in the case of Bank of Japan or the Bank of England. However, the policy statements are likely to provide useful hints about the direction of policy in each of these cases. You can expect an increased volatility around the announcements in the dollar-yen, the pound-dollar and the euro-dollar currency pairs as a result. Now, besides the main events, other important upcoming data points include preliminary gross domestic product figures from the euro area on Tuesday, alongside advanced estimates of unemployment and inflation figures. It is also a big week for stocks, with Apple, Facebook, Amazon and ExxonMobil set to report their earnings results. To cap off the week, Second Investment traders should keep an eye on US stock benchmarks like the Dow Jones Industrial Average and the S&P 500 for momentum following the release of the latest payroll data and unemployment rates coming out on Friday. Well, that's it for Second Investment's wrap-up of last week's price action and what to watch out for in coming sessions. Be sure to join us next week as we analyse and interpret the latest breaking developments in the global financial markets. That's it for this time. Thanks for watching and see you again soon.